Now let's carry on with part 3. Yep, this is part 3. So as we're talking about this, the bid offer, if it goes up to by 10 pips, 38.14. Here we'll move by 10 pips, but because you have paid a spread, you would have made a profit of 6 pips. You got to think into the spread. Okay, so you previously were looking at 138.04, but when you sell it back, it's 138.10. So you bought at 04, you're selling at 10, you made a profit of 6 pips. Now that's where the spread comes in. Okay, the difference, right? Although you have made 10 pips here, like on part 2 we were talking about it, when you make 10 pips, although you have made, but when you deduct the spread, the 6 pips. Now, I hope you guys understand it from here. Okay, it's not difficult, it's not entirely yeah. So I mean, I can't ask you whether you have any questions, but well, as we progress, I hope that you will understand. Okay, so those that have questions, please write it down and email us or something, and we will see what we can do. Yeah. Okay, next slide. Now, why trade Forex compared to any other market in the world? Right? 24 hours market. Okay, I can decide to trade in the Singapore time. My colleague can decide, okay, I want to trade on London time, right? You, for example, you want to trade on the Singapore, the US time. Fine, there's no problem. 24 hours, anybody can trade. Now, high liquidity is the biggest market in the world. You can instantly get buy and sell. You can buy and sell at will. You get the price. There's no slippages. And you have leverage. Now, leverage is basically a tool where the broker gives you money or backs you up. For example, most of the brokers offer 1:100 leverage. What it means basically is if you have $1 with the broker will back you with $100. So if you have $1,000 in your brokerage account, you can trade up to $100,000 worth of currencies. Now, do you see that? That's called leverage. Now, you can make a lot of money. Seriously, you can make a lot of money. But at the same time, you can lose a lot of money. Okay? You're using small money to control big money. Now, for Forex, there's no contra available. And it's so competitive, right? That brokers are willing to start traders with a $50 account, some even less, right? So with that small entry level, okay, it's accessible to anybody, okay? Anybody who wants to trade. Now, who should trade Forex? Anybody, right? Want to earn extra income, you are interested to take part in the financial markets, to become a trader, okay? And it's just for somebody willing to learn something new, right? Now, this is the average daily volume of the different markets, right? You can see daily, mind you. The Forex market is about $4 trillion, okay? Compared to the New York Stock Exchange, which is 74 billion average trading volume, right? So what it means is that one trading day, okay, because Forex is a 24 hours market, right? So in a 124-hour cycle, it's worth or has more volume than 1 year of the New York Stock Exchange. So think about it, such a big market, okay? So much money is flowing in and out of the markets every day, 24 hours. Okay, so let's go on to the next part. Now, the real Forex picture. What does it take to become successful in this business, right? First of all, you must have a trading plan. Now, before trading, many years back, I ran several businesses, right? Now, number one rule in all businesses, you need to have a business plan. Okay, you need to have the discipline to follow the business plan, right? So in trading, it's the same thing. You need to have a trading plan, okay, and more importantly, the discipline to follow the trading plan. You need to allocate time to read and do your research. Read about other traders, use their experience to help you improve your trading. Right? You need to research on certain news and certain reports, and always upgrade yourself, because trading is such a big thing, and so much knowledge is available and so much knowledge required. You know, you need to better yourself, right? Now you need to have a solid system. A system is basically part of a trading plan. A system cannot run by itself. It needs to have a trading plan. But a trading plan, the rule is the trading plan can run on any system. Okay, but a system needs to have a trading plan. Now, most people neglect this part, back and future testing of the system that they use. Okay, a system is basically rules to govern your entry and exits into the markets. Right? Back testing and future testing allows or builds confidence, the trader's confidence in the system, because when the bad times come, which is called the drawdowns, when the traders start lose money consistently, he can fall back on this confidence that the system is just in a drawdown and this won't last very long. So the trader would continue trading the system with the knowledge that or the confidence that the system will pull up positive, right? Now most people, when they hit the drawdown, they quit the system. Although the system is very good, right? The system gives them a lot of profit, okay? But when they hit the drawdown, they just leave it alone and move on to something else. Now you need to have a good understanding of money management, and you need to implement it well. Okay, money management is the key. The longer you survive in this market, the longer your account survives, the higher chance of you becoming successful. So you need to last. You need to survive. If you don't survive, you're dead. Now, what does a trader or full-time or professional trader like me go through, or like us? Stress. In the beginning, you worry about unsteady income. Okay, friends and family will say, "Hey, you're crazy. Like, come on. Get a proper job." Okay, they compare, but more importantly, or more dangerously, or more harmful to you is when you compare yourself with other people, other traders. Okay, once you do that, your self-confidence will drop. Okay, you need to have very strong confidence. Sometimes it portrays as arrogance, but it's confidence. You're oozing confidence. You need to have that, right? You need to keep a clear head when things start to go wrong. When you're in a drawdown, you need to be clear. Okay, that's where trading psychology comes in. Okay, now have a realistic expectation of what trading can give you. Now everyone is in for the money, right? Now look at this advert, or you look at other adverts. They promise you untold wealth. Okay, fortunes to be made. You can make hundreds of $1,000s in 5 minutes a day or something like that. Don't be fooled, but have a real expectation of what it's going to be. Now, in the beginning, don't worry about making money. Worry about not losing money. You should be just fully concentrated on keeping your account steady. Okay, don't worry about doubling your account. Don't worry about tripling your account. Don't worry about all this. Okay, protect your trading account. You need to protect your trading account from disasters. Okay, this is hard work. There are no romance involved. It's a business. Treat it like one. Okay, trading is a very romantic idea. The cars, the woman, the houses. It's all very romantic. Simple. Okay, my time is ending. End of this part. Next part's gonna come soon. Hang on, guys.